poorer. That's the latest from the Oxfam report. But it's back to Davos. Menaka joins us now, and she is one of the most respected voices on the crude markets with her. Menaka, over to you.
Welcome to this special broadcast on Davos 2016. I have with me one of the most influential voices on energy, Dan Yergin, Vice Chairman, IHS, and Pulitzer Prize winner for his book on crude and energy. As you can see, I'm holding it up right here. Well, let's get to him and ask him about what he makes of where crude oil prices are headed, because that is the talking point here in Davos as well. We broke through 30, we broke through 28, and now we have Iran in the mix saying it could potentially pump 500,000 barrels per day. What do you make of where prices are headed?
Well, that's a really critical question of what Iran can do and what Iran does do. If it puts out the type of barrels that we've been talking about in the higher numbers, then that will just be, particularly at this time of year, will just add to the downward pressure on prices. So I think for the next few weeks, the oil market is going to be looking very carefully and trying to calibrate exactly what is Iran doing and what is it capable of doing. But I think for this quarter and into the next quarter, we're in a period of low oil prices.
Okay, when you say low, how low? There are some estimates that put crude oil prices at $10 later this year.
Well, when we saw oil go to 10 in 1999 and 1986, it was because they ran out of storage. At this point at IHS, we don't see the world running out of storage. If it does, then you would get those much lower prices. But it looks like we're in this sort of $25, $35 range. But, you know, so much depends upon what happens with Iran. And the other big question that is weighing so heavily on the oil market right now is the slowdown in China. And there the question is, how slow?
And that's an answer nobody has so far.
No, China just came out with growth numbers which were about which were the lowest in a quarter century. People are expecting maybe there'll be a stimulus and so forth. So the question about China is it just making a transition from one kind of economy to another, or are there really structural problems there that are going to mean a slower China, and a slower China affects the whole world because the weight that China now has in the world economy.
Okay, I'm interested in knowing what these lower crude oil prices have done to the shale competition, and whether, we are going to see some decimation of American capacity, which would eventually in 6 to 8 months mean that OPEC can then, sort of cut back on supply maybe.
Well, I think that is, one of the other questions. People have been expecting U.S. shale to go down more quickly than it has. It's turned out to be more resilient because it's been more efficient, because producers are more focused. But at these price levels, it is very, very difficult. And a lot of these companies carry a lot of debt. So we think that probably by sort of mid-late spring, we'll see U.S. oil production maybe about 1 million barrels a day lower than it had been last spring. And if prices remain in this level, you're not going to see the investment to maintain production.
I think where large companies are already taking big write-downs on some of their shale products.
Both a combination of write-downs going on, and you see the companies are cutting their budgets, they're cutting their expenditures, they're cutting employment, and sort of hunkering down for a period of lower oil prices.
Okay. What does this mean for the push towards renewable energy? For many countries like India that are now very, very focused on pushing out bigger capacities in solar, etc. If crude oil prices stay at 20 to 25, will renewable energy be viable? Well,
renewable electricity, solar and wind, don't really, in many parts of the world, compete with oil. They do compete with natural gas. They do compete with coal. And so if you have those low prices, and many natural gas prices around the world are linked to oil prices, that means that it is a tougher competitive environment for renewables. A lot of the thinking, for instance, Germany made this big campaign to push renewables, but it was based upon assumptions that oil prices would be very high. So this does add to the pressure. It also, at the same time, this uncertainty in the world economy and the weakness in the world economy makes also just generally investment more difficult. So this is not good news for renewables, but on the other hand, there's a strong policy commitment in India and many other countries to continue to push renewables.
That's Dan Yergin there on where crude prices could be headed. Coming up next.